Hi, this is January 2024. I am Erin with Parks Ag Solutions, and this is our marketing assistance video. And the topic for this month is going to be macroeconomics and how that affects our agriculture products. Information from this video came mostly from the USDA, but then also a couple of private publications. I had a professor at Purdue that would say this a couple of times a year, that what happens on Wall Street affects what happens on Main Street, and what happens on Main Street affects what happens on our farm. So I took that and kind of ran with it and went with some of the topics that are included when we talk about macroeconomics. So let's start off with an example. So an example would have been back in 2008 when we started to have the stock market crash. And we started to see things falter a little bit in September or in the spring that moved into the summer and then actually into the fall. So that's when we started harvesting. So soybeans at the beginning of harvest was trading around $12, but the economic conditions, not only here in the United States, but then across the world, was actually starting to decrease. So by the end, we were seeing soybeans trading closer to $9. So just during that fall time, we were seeing that decrease spurred on by the negative economic situation of the stock market. So first topic, let's start with crude oil. Crude oil is used, for sure gasoline that we all use, but on the farm also on diesel fuel, as well as some lubricants and oils that are used on the farm. Those expenditures come up to 30% of, what is used on the farm, what their expenditures are on the farm comes up to about 30%. So when we see crude oil increase and we see those products increase, we see their expenditures on the farm that we have actually increase as well. Natural gas falls into that. Natural gas is priced a derivative of crude oil. And then, natural gas is used then for fertilizer, especially nitrogen fertilizer on the farm. So if we see the natural gas price go up, we usually then see the nitrogen fertilizers go up as well. And what we're starting to see, which I'm going to call fairly new, is we're starting to see crude oil affect soy oil, especially soy oil. Because we're seeing more soy oil go into biodiesel. So if we see the crude market and the soy oil market starting to be in more correlation because of that, and of course the speculation is as we move into the future, we're going to see more of that. The next topic is interest rates. So as we all know, the last few months, or actually for about the last year and a half, we have just seen a steady increase in interest rates. And when interest rates increase, we just see a lowering of borrowing. And then the lowering of borrowing reduces the overall demand for goods. So the cost of debt increases. The cost of operating loans increases. Carrying, corn or soybeans in the bin also increases. So when we have an increase in interest rates, we just have an increase in those expenditures. The next one, which I think most everybody, whether you're in ag or not in ag, will get this one, is going to be household income. So as income grows, you see consumers buying more, right? And not only do they buy more goods, but they also buy more food goods. And the opposite happens. As income drops, you see the demand for the products drop as well. And especially proteins, and I'm going to say like more expensive proteins, and then fresh fruits and vegetables as well. So you see income affecting both of those. And I'm going to add, not only in the United States, do you see income affecting demand for ag products in the US? When you see other countries in the world increase in their income, you also see an increase in demand for those products. And the same thing, chicken, then they're going to move up to pork, and then they're going to move up to beef. Instead of more grains, they're going to have a demand for more fresh fruits and vegetables. The US dollar exchange rate. Doesn't matter if you're listening to the radio on the Ag Update. I even give on Friday mornings. Sometimes I will include when interest rates are changing. And you hear a lot of times the US dollar is stronger, or the US dollar is trading weaker today. And what does that mean? What does that matter to us? So if the currency of a purchasing country depreciates, so it goes down against our dollar, that makes that product more expensive. So our US product is more expensive to what they're going to have to pay in their home country, in their local currency. Here's an example. So if you have a country we wake up tomorrow and they're in a financial crisis, and their currency is devalued compared to ours, there's a reduction in imported goods just because those goods are more expensive. So when they wake up tomorrow and they want to buy Oreo cookies, it's going to cost them more in their own currency than what it did the day before. So what we see is overall fewer US products are imported to those countries, just because, take everything else away, but just because of the exchange rate. So we've talked about crude oil, we've talked about interest rates, we've talked about household income, and then actually exchange rates of dollars in currency. So now I'm going to flip it, right? So all those things, what were affecting those macro economics that were affecting the ag. I'm going to flip it and remind you that even though farming is less than 1% of the US GDP, it has a significant impact on non-farming areas. Here's a couple examples. So manufacturing of machinery, manufacturing of fertilizer. Most of those are done in large communities, if not almost urban areas. Farm services, food processing and distribution, those are located all across the US. So farming can be a really important component of those local economies. And the farming growth and success leads to those industries' growth and success. So even though sometimes these macro markets affect what's happening on our farm, we have to keep in mind what's happening on our farm also affects what's happening in other places in the US. And I will even say in other places across the world. So thank you for watching this video. If you have any questions about these macroeconomic subjects or anything else, I'd love to have a conversation with you. Thanks.